Welcome to the UK Investor Magazine podcast, the latest on shares, markets and investments, now available on your Amazon Alexa.
Hello and welcome to the UK Investor Magazine podcast, now also available on the UK Investor Magazine mobile app. For today's podcast, we're going to be taking a look at Tekcapital's review of 2024. We're going to be looking at the factors that drove performance of their portfolio companies during the year. And we're also going to be looking forward to some of the things that investors should be keeping an eye out for in the year ahead. And to do that, we're very kindly joined today once more by Dr Clifford Gross, who is the CEO of Tekcapital. Very much welcome you back to the podcast today.
Thank you, Jonathan. How are you keeping?
Very, very well. Thank you very much in the swing of 2025. You've had a lot of upbeat results so far from companies, and Tekcapital's is the latest. Very much looking forward to getting stuck into the numbers and what was driving that performance. But before we do that, I think it would be a good place to start for investors that aren't aware of Tekcapital, if you could give them an introduction, first of all, to yourself as well as the company, please.
Sure. I'm Clifford Gross, and I have founded Tekcapital with a very specific mission in mind, that is to commercialize new discoveries from the world's leading universities that could do two things: make a positive impact on the lives of the people that they affect, and also produce good returns on invested capital for our shareholders.
Thank you. Thank you very much. So we're going to be talking about some of those returns. I'm going to look at the headline figure to start with, if we may. And it was the investment holdings value over the last year grew 38% during the period. What were the key drivers behind that, Cliff?
The 38% growth in investment holdings was primarily driven by the successful AIM listings of both MicroSalt and GenIP, along with substantial commercial traction for innovative eyewear and strong B2B orders for MicroSalt. As a result of our portfolio growth, Tekcapital's unaudited net assets grew from $47.9 million in 2023 to $65.1 million in 2024. A 36% increase.
I'd like to add some context to that now and look at the outperformance of peers. Now, of course, looking at the 38% increase there, that outstrips anything that we saw in any of the major indices here in the UK. But I'm sure this is a question that investors will have on their mind, Cliff, and it's looking forward to 2025. So what do you think are the most important factors that will help Tekcapital outperform again in the coming year?
I think you could trace it back to Tekcapital's proven ability to identify and commercialize groundbreaking university discoveries that mitigate adverse selection. And we couple that by supporting strong portfolio company growth with mentoring and execution. And we have a very efficient corporate structure and multiple potential catalysts for value creation. Now, all of these sort of writ large are the key factors for continuing strong potential performance in 2025. I might add also that Tekcapital not only outperformed all of our peers in the UK, all of our listed peers. We were the only listed technology incubator that was profitable. Tekcapital also outperformed the indices in 2024. Our share price increase was about 27% for the year, compared to a minus 5.5% decline for the AIM All-Share Index and a 5.69% increase for the FTSE 250. So across the board, we hit our milestones and our stock price grew. We were profitable. We grew our portfolio, and no one else that commercializes university discoveries or early stage technologies in the United Kingdom that's publicly listed even came close.
We've, of course, talked about the top line, Cliff, and one of the things that jumped out at me from the updates was the low operating cost structure. And you made some comparisons to some of your peers. Now, of course, this question may seem obvious to some listeners, but I'd like to get your thoughts on how you feel operating at such a low cost contributes to your financial success.
Our estimated 2024 administrative expenses were approximately $2.2 million for the entire year. That's the lowest amongst all of our well-regarded peers. For example, by comparison, and this is from public sources, We have estimated that the administrative expenses for Molten Ventures was about $54 million. For IP Group, it was about $44.7 million. For Mercier Asset Management, it was $27 million. And for Frontier IP, it was approximately $5.3 million. And so for $2.2 million versus those administrative expenses, we were the only company in 2024 that was profitable. And our stock price improved the most on a percentage basis of all of those companies. That's efficiency. And Tekcapital's efficient cost structure allows the company to maximize returns with the least amount of drag against the portfolio investments. And this overall will generate better value for the shareholder. Further, we're continuing to seek to make further reductions in administrative expenses in 2025 to be even leaner.
We're going to move on now, Cliff, and discuss, which I know is probably one of the key things that investors are looking for from Tekcapital, and that is the IPO of Guident. You made the announcement at the end of last year. You would be planning for and preparing for a NASDAQ listing. Any updates there that you could provide, that would be fantastic. But also, what's the impact? Where do you see the impact for Tekcapital?
Well, we are seeking, as we've previously disclosed, a listing of Guident this year. A successful Guident IPO could further crystallize Tekcapital's balance sheet and potentially lead to a very material expansion of our net assets, as well as a narrowing of the discount between our net assets and market capitalization. 2025 is the year of the rollout of AVs. Waymo, which is a Google subsidiary, will be introducing its autonomous taxis in 10 more cities in the US. They are currently providing 150,000 paid autonomous taxi rides each week, right now. Also, it's worth mentioning that Waymo's accident rate is 78% safer than taxis with human drivers. So autonomous taxis and autonomous vehicles are here. Uber, Lyft, and Tesla have all announced that they plan to roll out AV taxis this year. The game is afoot. And not only in the United States, in China as well. They're making great strides in the rolling out of autonomous vehicles.
One of the things that I'm thinking, Cliff, when I look at Tekcapital, you move from being an incubator of technologies, you've taken them from a clean piece of paper to listing them. Guident will be the fifth portfolio company to IPO, and that will leave the portfolio all publicly listed. So I'm sure investors are thinking this, and this is the question that I also have. What's next? What's the plan for Tekcapital after the Guident IPO? Are you going to be taking an asset management approach to the portfolio, or are you going to stay within your roots of technology incubation and look for new opportunities?
If all portfolio companies are listed, Tekcapital's focus will likely shift from investment management and towards an investment in company number 6. So it's a hybrid. And we think this will behoove us to do in terms of meeting our obligation and our stated goal of providing special dividends.
Thank you. And that is something that I'd like to pick up on now, because it was something that was reaffirmed in the review that was put out this week, looking at your long-term strategy of generating capital and returning that to shareholders via special dividends. I think the question is here, Cliff, when can investors expect a special dividend from Tekcapital?
While the timing for special dividends is not explicitly mentioned in the update, Tekcapital's core objective has been and remains the return of capital to shareholders via special dividends when there are monetized gains of greater than $10 million. Share buybacks, in our view, are irrational as they reduce liquidity in a market that's already suffering from a lack of investors. In our view, a technology incubator should deploy excess capital to grow its portfolio companies or return it to its shareholders.
Very direct, very much to the point. Thank you for answering that, Cliff. So to finish off now, looking forward to the rest of 2025, what are the 3 things that excite you the most about the year to come?
Well, we're really, without trying to be over exuberant, we're really excited about this year, this very year. Guidance potential NASDAQ listing, and I underscore potential because it's never a guarantee. Further significant commercial milestones from existing portfolio companies, all of them, including Bellascura, and the potential for a material increase in our net assets towards 100 million, we think are all within striking range.
Thank you very much, Cliff. Very clear objectives there, and I'm sure things that investors are going to be particularly interesting to keep an eye on as the year progresses. So, Cliff, thank you very much for being on the podcast today.
Oh, it's my distinct pleasure, Jonathan. Thank you for taking the time and having the continued interest in what we're doing.
Yes, I'm very much looking forward to getting you back on the podcast as the year progresses and looking at some of these key milestones, hoping to discuss those when they come to fruition. So, Cliff, once again, thank you very much. And thank you very much to everyone for listening. Thank you.
Thank you.
We hope you enjoyed listening to the UK Investor Magazine podcast. Please do share the podcast, and we really value any reviews and comments you leave us in your chosen podcast player. The views presented by the hosts and guests of the UK Investor Magazine podcast are in no way investment advice, and please remember all investment involves risk.